Yes, I get it, the stock market is basically still trading at all-time highs, but that doesn't mean that there aren't still some amazing deals throughout the market, especially if you're willing to dig a little bit. Now in this video, we're going to go over 5 severely undervalued dividend growth names that either all have a decent starting dividend yield from the start and or have some massive dividend growth historically, but all of these names all have some upside potential from here, in my opinion. So if you want to see which 5 names are extremely undervalued as of right now, make sure to stick around, drop a like down below, and let's get right into the first stock. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first single stock that could be offering a massive buying opportunity as of right now is none other than ticker symbol NKE or Nike. Now, where Nike is trading as of currently, it's offering one of the largest dividends that we've seen in a very long time, and by far the largest dividend that we've seen over the last 5 years. Now, with Nike trading in the low 70s as of right now, it's offering dividend growth investors a starting yield above 2%, which I get it isn't all that big of a starting yield, but again, comparing to Nike's historical dividend yield, that's a lot of cash flow for Nike. Now, Nike's dividend is extremely safe if you're an investor like myself that is concerned at least somewhat about dividend safety, and if not a stock or ETF is going to continue to pay a dividend long term, Nike is not the one that you should probably worry about. Nike's dividend growth is also there at an 8.8%, which means that even though Nike's dividend still is relatively small at around 2% forward yield, over the last 20 years, Nike has paid around 15% more in dividend income per year to investors, which means that as long as you hold on to Nike and as long as history was to repeat itself, you're going to get paid more and more in cash flow long term. Now, Nike has 22 years of dividend growth increases and 40 years without a reduction. So even though Nike is currently going through some pain and trading where it is as of right now, it could have a ton of upside over the next year or so. And on top of that, you're going to get paid a pretty penny to hold on to it as far as dividend income goes. The next dividend growth name that's offering a massive starting yield and is still massively undervalued as of right now is none other than ticker symbol BMY or Bristol Myers. Now, Bristol Myers currently has a forward yield of almost 6%, which is by far the largest dividend yield that we've seen Bristol Myers have in several years. I mean, the 5-year average, after all, for Bristol Myers dividend yield is around 3.15%. So buying into Bristol Myers, if you're willing to at these prices, you are not only going to be exposed to some potential massive upside as far as price return goes, but you're also getting basically double the dividend that it has had historically. Now, I personally have invested into similar different situations. I remember buying Main Street Capital back when it was trading in the 20s and the 30s. Now Main Street Capital is trading in the 50s. Now, I'm not trying to compare Bristol Myers or any of these stocks to anything else that's happened in history, but I'm just saying that if you do look hard enough and do your own DD, there could be some massive opportunity long term. Now, Bristol Myers dividend safety score is 70, so again, all the names we're going to go through in this video all have potential upside, all have super safe dividends, and maybe my favorites all have massive dividend growth historically. Now, Bristol Myers dividend growth is much slower than Nike, but still around 4 to 7% or 5.3% on the latest. It means that year over year, you're most likely going to get paid more and more in cash flow, which is important, especially for investors like myself that are looking to live off of dividends later on. Not to mention, Bristol Myers has 53 years of dividends without a reduction, so the dividend is probably pretty safe, at least moving forward. So if you're a dividend growth investor out there looking for a deal in this very frothy market, definitely look a little bit deeper into BMY. Another dividend growth name that's offering a potential massive buying opportunity is CVS or CVS Health. Now, where CVS is trading as of currently in the high 50s, it's still offering dividend growth investors like myself a 4.46% forward yield, which is much higher than we've seen in the past, almost twice as high as the 5-year average of around 2.8, 2.9%. Now, CVS has an 80 on the safety score, so the dividend is most likely going to be relatively safe long term. And on top of that, over the last 20 years, CVS has raised their dividend around 16% per year on average, but over the last 5 or so years, it's slowed down quite a bit at only a 4% per year increase. So as far as dividend growth goes, who knows exactly what's going to happen with CVS's dividend in the future. But to be fair, CVS does have 27 years of dividends without a reduction and 2 years of consecutive increases. Now, I personally am sort of burnt out on this entire sector after I invested a decent portion of money into Walgreens a year or two back and was burned pretty bad. But if I were to invest in something in this area and something that's definitely on my watch list as of right now, definitely CVS Health. And of course, I'll keep you guys updated if I do end up grabbing any of this one. Another dividend growth name with massive upside from here, a super safe dividend, dividend growth, etc., is RHI or Robert Half. Now, Robert Half is a human resource and employment service, a staffing company with a forward dividend yield of around 3.25%, the 5-year average dividend yield around 2.25%. So you're getting about a 50% larger dividend starting off than Robert Half investors have seen a lot of times historically. Now, Robert Half's dividend is very safe, which is awesome to see, especially for a company offering a 3.25% forward yield. But on top of that, there's massive dividend upside. Considering 19 years of increases and 19 years without a reduction, Robert Half has paid investors more and more year after year to the tune of around 10 to 12% every single year, which is definitely up there in the realm of some of the highest dividend growers. But what's crazy is with that, you're still getting a decent starting yield. Now, I would need to look a little bit deeper into this one and see what's going on, see why this company has been drawn down, and look into why Robert Half is trading where it is as of right now. But this one definitely crossed my screener and should most definitely be in your watch list, one to look into. The last and final dividend growth name that could be offering a massive buying opportunity and is trading extremely cheap, at least compared to history, is none other than Hormel Foods, or ticker symbol HRL. Now, Hormel's currently offering a 3.65% forward dividend yield. The average 5-year is 2.16%. So once again, just like pretty much all the names we went through, super undervalued relative to the last 5 years at least, and is offering one of the highest yields investors have seen in a while. On top of that, Hormel Foods does have a 90 on the dividend safety score, which means the dividend is pretty safe. It should be locked in from here. But as far as dividend growth goes, it's sort of a mixed bag. Over the last 20 years, Hormel has raised their dividend 12% on average per year. But things get worse as time goes on. The last 5 years, it's 8%. And then the most recent dividend increase was pretty slow at around 2.7%. But still, Hormel has had a 58-year dividend streak of paying dividends on time. And not only that, increasing dividends long term. Names like Hormel, Kraft, a lot of different packaged foods and meats consumer staple companies have been in some pain pretty much ever since, I want to say, 2022. But again, long term, these legacy companies could be offering a massive buying opportunity. Who knows? But either way, this one crossed my screener and is definitely an undervalued dividend growth name, at least relative to the last 5 or so years. So there we have it, guys. Those are 5 different single stocks, 5 different dividend growth names that could be offering a massive buying opportunity as of right now, even where the market is currently trading. Now, out of every single one of those names we went through in this specific video, I want you guys to comment down below. If you guys had to choose to purchase just one of them, which one would it be and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by. And if you are interested in investing, make sure to check out these recent videos I posted right here.